And what should traders actually be watching?
If you're using those AI tools to power your trade, that is going to give you edge than others. But
Stock market is famous. Crypto is everywhere. But the biggest financial market on the planet.
a great question.
So is it an opportunity or a trap?
It's too much noise. Extremely common. That is also the case. More than you think. They should not engage in trading at that time. Something I won't recommend to any beginners.
Most finance guys on the internet talk big and quietly delete their posts when they're wrong. But my guest today did not delete anything. Publicly called silver's rally, called the Bitcoin crash, and documented 3,500% returns.
Hi Ashmeet, welcome to our podcast. And please teach me some ways of trading. So as we all know that the stock market is famous. Crypto is everywhere. But the biggest financial market on the planet. 7.5 trillion a day. Most people have never touched it. Ashmeet, for someone who's never heard this word, Forex, can you please break it down for us?
When you go to airport, right? I will put in simpler terms. You swap your currency at airport. Congratulations, you just did forex, and any foreign exchange is forex. And when you do it digitally on a platform like Olympus, it's generally forex trading. Now multiply that by every bank, hedge fund on earth doing that simultaneously. And for Euro USD, for instance, how many dollars does 1 euro cost right now? And if it moves every second, you can profit going up or down. The market runs 24 hours. Most people treat it like slot machine, but it's not. Professionals treat it like business, and if you also treat it like business, that's forex trading.
Okay, I definitely know someone who was waking up at 3 am to trade and wondering why nothing was moving. Is timing actually that important?
That person is literally every beginner, including me. Forex is 24 hours, but not all hours are equal. Think of it like a restaurant that's technically open at 4 a.m., but nobody's cooking, right? So that doesn't make sense. You need to be active on key sessions. For instance, Tokyo session, that is like one of the quietest session. Then there is London session where European market and European institutional money floods in. Then we have London and New York overlap session, which is around 1 p.m. to 5 p.m. GST. And both financial giants, London and New York, they live simultaneously, and these spreads are tighten, volume spikes at that time. What we call it as like consider it as a golden window, right? So trading GBP USD at 3 a.m. it's like going club at 2 p.m. The vibe is just isn't there. Make sure you are trading in the right time with your right trading setup in those hours where you can get market volatility as well. That's where fun, literally real fun is.
Okay, so before AI, before algorithms, even before Bloomberg terminals, there was one tool traders used for literally 400 years, and it's still on every chart today: candlesticks. What's actually going on there?
A great question. For every beginners, they should know candle is like a battle report. Open high, low close, buyers versus sellers, and all are going in war with each other. Buyers are, buying their trades. Same time, sellers are observing it. So, in simple terms, it's buyers versus sellers. Green body means buyers won. If it's red body, then sellers won. It's very simple. So the wicks tell you what worked and what didn't work. Maybe long, let's say they are more buyers. So long upper wick means buyer try to push up and got smashed back down. Long lower wick means sellers try to push it down, but buyers observed everything. The hammer, engulfing, shooting star, these all are patterns. These patterns have shown up across every asset class for centuries. It's not today, it's not AI. These are just human psychologies drawn in lines. Silver that you mentioned, I was also bullish because of the same thing. The candles was telling me, and they were writing the thesis itself, and I just read the thesis.
You call silver from a chart, not a news headline, not a tip, not a vibe, a chart. How does someone even start developing that skill?
Mistake number one: everyone opens a 5 minute chart and tries to find a trade like it's a video game. Whenever you are starting your analysis, I think you should zoom out first and then start on weekly or daily candle first. Understand the bigger picture. Where are major swings, highs, lows, and historical zones? Institutional order cluster around those level only. So then drill to 4 hour of timing. Foundation is simple. Higher highs and higher lows is uptrend. Then that's a literally Dow theory from 1900. Nothing new. One signal go low is maybe. Four signal pointing the same direction at key level. Now you are having a real conversation with the market. So multiple indicators are pointing at the same thing. That means you are going in the right direction.
I once saw a trading screenshot with six different indicators: RSI, MACD, Bollinger Bands, two moving averages, and something called the alligator. What to do?
That situation only gives me physical pain. Every indicator is derived from price, right? So stacking six, that means six version of same thing contradicting each other. That should not be the case. Use structure and price action as your primary lens, then add one or two for confirmations. For instance, we have RSI divergence, right? So price making lower lows while RSI making higher lows. It's historically interesting sign of weakening momentum. The cleanest traders I know have cleanest chart. Trust me on this. I mean, I've seen people making messy charts with multiple indicators, but it's resulting to nothing. So it's too much noise. Everything else is noise if you're not using right or simple few indicators. Um, if you want reference, maybe you can refer to Olympus Capital's indicator list. They have like complete guide on what kind of indicators should be used in what kind of setups, and it will definitely help you out. Or just educate yourself by looking at different patterns and see your observations.
Okay, so I recently got to know that there are over 100 currency pairs available, right? So what should a new trader look at?
I don't blame you for that. When we have hundreds of currencies in the market, then choosing the right one is super important. Let's start with majors first. Euro USD, GBP USD, and USD JPY. Tightest spreads, highest liquidity, and most documented. And each of these pairs have their own personality. Like GBP moves violently on UK data. Then we have JPY, which is sensitive to Bank of Japan, their signals. Then USD and Euro USD, which is like most cleanest trend setups of all time and is one of the most liquid pair on earth. That is one of my favorites as well. You can start from that as well, and master one before you move to another one. Every day it should not be different pair, and try to master one, learn, educate yourself, then move to next. Know it like you are knowing your opponent on chessboard. What are their patterns? What are their moves? And I think that's if you take that approach, it would be super easy moving forward in your learning journey. And many brokers like Olympus Capital allow you trading across different currencies. So trading is not going anywhere. Take your time and then move carefully.
Okay, like every blown trading account in history has one thing in common. And if it's not bad analysis or a bad timing, so what exactly it is?
Blown accounts, I think we blown account is really more frequent than you think. If there is no risk management, I think just stop. Nobody makes real about risking 1% and following their rules. But that discipline is the only thing that keeps you in that game long enough to get good. Widely referenced rule. What I also believe is never risk more than 1 to 2% per trade on maybe $10,000 account, right? So that maximum $100 to $200 is the maximum loss that you can get, and that's the beautiful part. Okay, another statistics: a 40% win rate with 1:3 risk reward ratio is mathematically more profitable over last sample. So you don't need to be right all the time. You just need math to be on your side.
There's a very specific kind of trader pain when you move your stop loss just a little because you're sure it's gonna come back and then it doesn't come back. Sounds familiar, right? Anybody can relate to it. I think everyone can relate to it.
Until recently, I've stopped myself from doing this. But still, whenever I'm looking at my setup and it's going against my trade, it happens with me as well. Uh, every trader has done this at least once. Moving your stop when the trade goes against you isn't that's not a strategy. It's a grief. Uh, you're holding a rope and you're hurting yourself, right? So your stop goes beyond a structure level, a swing low, a key support, where market would need genuinely, invalidate your thesis. You have made your setup, now you can see it's invalidated, and if that breaks it, you are wrong. Take the loss and reload. Please let go of that trade. Don't need to move little bit, and it happens. I know it's a human psychology, because I've done this myself. So take profit at next significant resistance or your R multiple target. But exit planning before entry isn't optional. It's the whole job itself.
Every Friday we get reports and the market is moving. So is it an opportunity or a trap?
That's news trading in nutshell. What happens to retail trader at that time? Like they are in position, they have made their setup during news hour. NFP drops, spread widens to 40 pips. Stop gets triggered, price reverses, and it goes exactly where they thought. Right. So in their mind, it they think it is going that way, but it triggers their stop first, and then it reverses their price. It is brutal. Agreed. Extremely common. That is also the case. More than you think. Beginners should sit for first 15 minutes post release. They should not engage in trading at that time because sentiment is a deepest layer. When 80, maybe 85% to 90% of retail is low, smart money at that time historically tend to short their position that time. They go other way and they need that retail liquidity to fill their massive pockets. I should not say that, but that's the truth. And many reports and broker sentiment tools that gives you that window. And news trading is something I won't recommend to any beginners or even moderate traders. Only pro traders, if they know in and out, they understand the sentiment, and then they engage with it. Then only I think that's the acceptable condition.
So now I have a last question for today. Like Forex has been around forever, but the market today looks like nothing it did 10 years ago, right? So where is this all going? And what should traders actually be watching?
Things that are reshaping future of forex right now, which many of retail traders are they are not paying attention to it, uh, and I think more and more people should know about it, which is algorithm and copy trading. Earlier it was retail traders who was engaging with it, and but now they have like automated strategies that is completely AI driven. Algorithms are processing macro data and order flow way more faster than any human possibly can. So, the smart move now is to trade alongside with it, not fight it. You cannot fight AI that, they are going to replace it. It's not. They are tools that you need to use to power your trades. Play with it. Use them in your advantage. You cannot read data at the pace which AI can, right? So that's what future is. If you're using those AI tools to power your trade, that is going to give you edge than others. But the trader who ignore this shift is like the situation is like playing 2015 poker on a 2025 table. So please change your ways, not entirely, but use this for your advantage. I think it will really help you out, and because that's where, in my opinion, future is heading to. That's pretty much it on this.
Okay, so that's a wrap. Thank you, Ashmi, for today's podcast, and thank you all the viewers and traders.
Thank you, everyone, and thank you for inviting me here. I like how we touched upon all the topics. Like we started from candlesticks, and then we ended up in future of forex. So we completed the entire horizon of forex. So I think we It was pretty much
Yeah, it was.
great conversation. And all the viewers and future traders, possibly, if you're not already, if you are if you're thinking how to start a journey, there's a link in description of Olympus. Maybe you can start your account, demo account. There's many analysis reports that there is already there in that link, so you can go analyze, study more about charts. That is, I think, best way to start your trading journey. All the best. Please manage your risk. That is my last advice. Whenever you are trading, manage your risk, and it would be fun once you are consistently following your principles. Thank you so much.
So, guys, before leaving, don't forget to like, share, and subscribe.